What's going on, team? We got to take a look into this market. We are getting ourselves just right now a little bit of a pushback. Will we find ourselves a little bit of a rally? Find out right here. And of course, is this stock market pullback one to buy? Our question of the day. Let's ask ourselves that. We'll see what happens today. Of course, the January effect running to a wall yesterday. We'll talk about Jamie Dimon's comments. We'll get into the earnings reports out there. And don't miss the coverage from the short report that came out from the Bear Cave. My man, Chris Ketchy, definitely given a great article on Benzinga.com. Don't miss that as we get into all the action right here on Stock Market Movers. And of course, I have a guest today. We'll be talking about real estate, the housing market with Higharc CEO Marc Miner. Stick around, team. Let's get into the action here. Welcome to it. This is Stock Market Movers. Let's get right towards it. There are three ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, team, let's go ahead. Let's get right towards the action. I want to show you guys a little something before we get too much into the talk today. One thing that I'd like to use often, and I feel like too many traders don't use this, team, is using methods where you're using different charting methods, right? A lot of your traders are going to be using candle charts like this, right? But I will say, one thing that I've been moving more and more to is understanding here, like what you see to the right, which is a bar chart. Why do I like bar charts? Well, a lot of the bar charts are going to tell you really easily, are we closing towards the high end of the range? Are we closing towards the low end of the range? It gives you the points that I like paying attention to, right? The meat of the candle doesn't really matter to me. I want to know the open. I want to know the close. I want to know the low and the highs. Those are what's going to matter to me on the candle. So that's why I would recommend check out some bar charts, but that's enough on that conversation. Let's take a look at the market overall. We did get a little bounce here, starting to bounce back towards the 389.30s. We could see a little bit of a pop back today, right? We have been getting a little bit more into that oversold. We definitely fell off the tape yesterday, all the way from 400 down to a low today of 387. That was a lot, right? Big takedown there. We'll see what happens now as we start bouncing back. Will this be a pullback to buy? The question of the day. Well, we did get initial jobless claims talking about today. What did they come in? They came in at 190,000 versus 214,000. Remember, the prior reading was 205,000. What does this show us? Well, this shows us that the jobs and labor market stays robust. You guys hear this from Fed Chair Jerome Powell. And if the labor market is going to stay robust, what does that mean? Well, that means that we are going to probably continue to raise the rates, right? There's no reason to think, at least in my eyes, why they can't go 50 basis point at the next meeting. You guys have seen the CME Fed tool has now gone above 90s for the 25 basis points at the next meeting. Who knows? Maybe they surprise us with the 50 basis points, which I think is more important, right? I think it's more important to front run these rates and let the effect play into the economy. But we'll have to wait and see what happens there. Initial jobless claims not helping the case right now for the bulls. And just think about that, right? That's a decline of 15,000 jobs from the last one, which was 205. So we're not going in the right direction. We need to go into the right direction here with initial jobless claims. And of course, seeing that unemployment rate spike back up is what we'll be looking for. We saw it tick back down to 3.5. We'll keep an eye out on what happens there. Let's get out of the initial jobless claims talk. Let's talk also about comments that were made by, of course, Jamie Dimon. Jamie Dimon giving some comments this morning on CNBC's Squawk Box. He stated that I actually think that rates are probably going up higher than 5%. I think this is definitely important because I think that there's a lot of underlying inflation, which won't go away so quick, said Diamond on CNBC's Squawk Box. He also stated that we had the belief that China's slowing down, the benefit of oil prices dropping a little bit, and that's what was helping the market get that inflation down. And now he's saying that I think oil gas prices are probably going up for the next 10 years, and China isn't going to be deflationary anymore. There's a couple of ways that we can take away these comments, right? There's the outlook first for the Fed outlook, which is what we've been talking about. And are we going back to that 5%, right? That's very important to catch. One thing that we'll keep in mind, will we get there, right? Well, if we stay on kind of the 25 basis points, it's going to take a little bit more, but we're almost there already. We need about, 75 basis points more, and we'll get really close. Of course, 5% is a little bit higher up there. We'll see where we end, right? There's so many outlooks that it's like 5 to 5.5. Some people even saying 4 and 3/4. We'll have to wait and find out what happens from the Fed. But I think he's also given us some other insight here. He expects oil to rip, right? Oil prices going up for the next 10 years. If that's true, then maybe we want to be looking at like an ExxonMobil and these oil stocks, right? Or maybe you take some of his comments about China, right? China not going to be deflationary anymore. Maybe we should start looking at China trade a little bit closer. I know that BABA has taken off, but maybe we can start finding some laggard style trade like this JD PullBack or maybe PDD that hasn't really gone anywhere since early December. Who knows? Maybe this is the next leg up in the China trade, or maybe it's China EV that haven't done anything as of late. I'm not the biggest fan of EV, but as you guys can see, it's starting to pull back here. We'll look to see if this opens opportunity in the China stocks also. I think it's important to catch comments, of course, from Jamie Dimon, JP Morgan, but always take it with a grain of salt, right? We don't know what this really is going to bring. And I think it's something to keep in mind. Last time he mentioned about the hurricane, it really wasn't that bad. We'll just have to wait and find out if he gets it right this time around. Of course, the January effect has been running into the wall and the value trades have been coming off. We can talk a little bit about that before we get into our interview today. Let's take a look at how these trades are doing today. Yesterday, they got hit really hard. Stocks like Kraft Heinz Company, you can see it bouncing back today towards 40.25, but still not, climbing the whole wall of worry there. We did get Procter & Gamble to give us earnings today. Let's talk about those earnings and take a look at the stock. This one also got hit yesterday, got hit in the pre-market, now starting to climb back. Is this acting as resistance, though, around the 146 area? That's the only concern for me here on the chart. Q2 EPS 159 in line, sales at 20.8 billion, beat the 20.73 billion estimate. They raised fiscal year organic sales growth guidance up from 3% and 5% now to 4% and 5%. We'll see if this pulls back towards the end of the day. Was down towards a low down there towards 140. We'll look to see if we close back down there as Procter & Gamble fell off the tape yesterday. Of course, these are households and product names. It wasn't just only these, right? We started seeing names in the industrials start breaking down, right? We started seeing Deere break down. You guys can see that breakdown in Deere now. Daily chart now filled in this gap again here. I think it's always important to look for those gap fills. Now you got that gap fill. It looks like we're coming back. We could be coming back to a prior resistance. Of course, we've been in that 380 range before. That's where we really broke out of. We'll look to see if we retrace towards that. 200-day moving average is around right now 375. I could see that ticking up there towards the 380s. We'll see what happens there in DE. But CAT also turning around, right? We'll see what happens in these names. Is it a complete turnaround? You guys heard my swing trade yesterday. Shout out to in the chat. Gave me a nice little shout out to start the day. My man Eric S. talking about the GE trade. Let's talk a little bit about that. Took a little bit of profits today. Just want to let you guys know about that in GE, but still got a little piece and only took off about a third of the position through what? Through 77. Now I'm looking for the 9 EMA touch. 76.59 on GE is where I'll be looking for it to get down there. 77.03 is where I took some on this first move down. We'll look to see if this can continue. Swing trade to the downside. What do we want to be looking for maybe for this one, right? I talked about it. Honeywell continuing to be weak. This is what got me in the trade yesterday, watching for the industry move. Now we're looking at Honeywell. It's continuing down. That's a good sign for us there in, of course, the diversified industrials. You can look for some more in that industry, or maybe you're just looking at XLI, right? Look how the industrials fell off the tape. This was looking strong. It was looking like it wanted to push up. Now it's pulling back fast. Of course, we could find a bounce. So eventually, I'm going to take some profits on these names. I don't think GE is a name that I want to forget to the upside. I'm just trying to play it a little bit for this pullback, take some profits, and then eventually look to see if it can do the 50% retracement, which would be down there towards 74 on General Electric. All right, let's keep going. We'll take a look at some other trades out there, but just wanted to point out that we are seeing the reversal there. And of course, the dash for trash trade coming off a little bit today. You could see that continuing with triple BY coming down there. Let's take a look at Carvana. Carvana back down to 615. As we're starting to see this break, will it completely retrace the whole levels? That's what I think we need to start paying attention to. A firm coming back there. Let's just use our retracement tool, right? Let's take a look. What would be 50% retracement? Right around where we bounced today, right around that 1180s. So we're going to look to see if that breaks. Does it break the support around here, 1171? If it breaks that and starts coming towards 11, I'll feel it does the full retracement. But keep that in mind. These stocks could still make a little bit of a push up. ARKK pulling back fast today shows us also those growth names just pulling back fast. Take a look at the Kathy ARKK. Look at all these names that are in the red today. I always like doing this because I think it's important to understand that some of these trades trade very similar, right? Take a look there. Zoom, Roblox pulling back, Roku pulling back, TXG. This one has been really strong. Keep your eyes on that TXG. Tesla pulling back today. PD, Shop, Path, Square, Hood. Look at all these names, right? TDOT, Coin pulling back fast there. Coin, perfect example of a stock that was ripping, now pulling back fast and continuing the pullback. Could keep breaking down. Unity back down to 28s there. We're going to look to see if this kind of holds, but definitely you're getting those fast pullback on those ARKK names. Looks like Zoom getting a little bit of lift here. I'm pretty sure this is the market overall getting a little bit of a push up. Yeah, we'll see what happens there as we start getting a lift. I'd look for maybe names like Tesla to get re-strong. Apple, if it can continue back above the 135, that can continue in the strength. Let's take a look at where you're getting maybe some sector rotation going into the green. It's in healthcare right now. This is how I do what was hot and what was not live action, right? So we're seeing the market start making a move up. I can take a look at these healthcare names and see if that can continue pushing. Healthcare now starting to get into the green. We could take a look there. Healthcare plans doing well today. UNH bouncing back after getting hit hard, right? Humana bouncing back. I'd look for maybe Cigna to play a little bit of catch up. Leader laggard, right? We'll see if that kind of gets a nice little push up. Molina Health maybe gets a little bit of a pushback. I will be looking to see if any of these sectors kind of trickle into the green. We are seeing a lot of industrials get hit. We'll see what happens there, and the utilities also. All right, there's one more that I want to get into before we get towards our interview. Let's get towards Alcoa, as we did get report from Alcoa. This is in aluminum. We saw this yesterday really get weak here, was able to bounce towards the open, now fading away. I think one of the things in Alcoa that is one of the things that clearly comes into play is that they're still losing money, right? Alcoa Q4 EPS loss of 70 cents, beat the loss of 75-cent estimate. Sales at 2.7 billion, beat the 2.65 billion estimate. They did give kind of a warning that their annual mine plan approval process in the Western Australia is currently taking longer than it has traditionally. Just putting a warning out there. We'll see what happens there in aluminum. My other aluminum play that I take a look at is CE. NX. I have traded this one in the past, a cheaper name, right? We'll see how this kind of performs. Alcoa was making that nice little lift. It looks to me like it's starting to pull back, and this could easily turn around. Just to kind of state, aluminum leading the downside action today, and a lot of that coming off of the Alcoa report. We'll see what happens there in aluminum and some of the other kind of material plays. Basic materials taking a hit today. Really, the only strong area there was gold and silver. Those got a little bit of a nice little push. Gold continuing. GOLD, nice little move, nice little bounce back. We'll look to see if we can get back there towards 1950. I'm sure DXY, dollar index, not having a bad effect there for gold. All right, getting out of gold talk and Alcoa materials, let's go ahead and let's get into our first interview today. Like always, team, hit the like button. Let's get right to it. All right, let's bring on Higharc CEO, Marc Miner. Welcome back on. It's good to have you back on, Marc.
Hey, you too. Thanks for having me.
Of course, let's get into the action. Of course, it's been a little bit of time since our last meeting. We met in September. Let's talk about what you see in the home building industry as of late.
You know what? Housing as a whole has obviously been up and down the last 2 years, but Q1's starting to see the clouds parting for home building. So right now, just today, actually, we saw some news that home builder sentiment is actually rising, which is pretty great. And if you really step back and look at this year relative to most normal years, we're on track to do pretty well. Average number of homes built in the US is about 1 million per year. We're on track to do somewhere between 1.2 and 1.4, so 20 to 40% above the average this year, which, like, compare it to the last year or so, and it seems like there is a dip, but all things considered, home building is shaping up to be in good shape this year, even as housing itself might be continuing to have some downward pressure due to the mortgage rates.
All right, let's talk about that. I recently saw a survey by Lending Tree that stated that despite housing market headwinds, 80% of home buyers in the past 2 years don't regret buying. What would you say about that?
It's awesome. Well, probably they were part of the reverse migration trend, getting out of big cities to other locations. So they're enjoying the fruits of that decision. They got some extra space. They probably have, like, I don't know, a yard now, that kind of thing. So even though they might have bought near the top of the market, there's some real benefits to moving into a house outside of major markets. And I think we're continuing to see that. So glad to hear that people enjoy their decisions. And I think that speaks to the power of, like, production neighborhoods, the building of homes in the context of other amenities that make life kind of enjoyable.
Yeah, and I did see another stat there in that survey that more than a quarter of home buyers in the past 2 years still say they're putting in offers in a home without even seeing the interior.
Wow, that's quite a stat. Well, you know, the home building in general is moving towards a lot more virtual interaction with buyers anyway, because buyers already want to shop online. So I think some of that's probably just the increase in the amount of information you can get online about what you're going to buy before you buy it. But you know, I also think that there's just so many people who are still on the sidelines waiting to buy a new home that we're just probably continuing to see some of that pressure on the market. When you look at the gap in the number of households being formed and the need for new housing, we're still something like 3 million units short. So there's going to continue to be pressure on the market, and you're going to feel that if you're trying to buy a house in an area that's in demand.
Yeah, we can get into a little more conversation, but it seems to me, I think what I also would love to see for, like, Generation Z and the new generation is give us some kind of benefit for first-time home buyer, right? Can we get some fiscal policy for the home buyers? That's what I hope for. What would you say about that end? Do you think anything like that could come soon?
I think that's a very hard ball of wax, ball of yarn to untangle,
Yeah.
and I think we're going to see gridlock in Washington. So I don't know that a lot's going to happen in the next couple of years, to be honest. So
All
anyway,
right. Now, one area that we are starting to draw a little bit concerns in November, Redfin was talking about housing market, like contract cancellation for the home building. Do you expect to still see contract cancellation rising, or is this just kind of more depending on the market?
cold feet type buyers. I think the mortgage industry, in terms of cold feet, often that has to do with how the economic picture changes for buyers as they get a look at what their rates are doing. We're
Yeah.
really focused on home building and helping home builders keep the cost of homes down by being more efficient. And this is something that a lot of folks don't realize. It's like a lot of the times the cost of housing, it's not because you're getting price gouged by builders. It's just a trickle down of the cost of materials, cost of labor, and inefficiency throughout. So we're focused on helping builders unlock margin, get rid of a lot of the inefficiency, so they can pass on savings to buyers. And we're already seeing that happening, which is pretty exciting.
Yeah, that's awesome. I actually had a question particularly for that. And as we see inflation come down, how are the components in home building doing?
We're getting there. Yeah, certainly there are still there are some parts of the home that are still seeing, let's say, some stubborn. They're being a little stubborn as they come down,
Yeah.
but pretty much every single category is coming down, which is exciting. There, in terms of supply delays, things like windows are still a little challenged, but for the most part, the global supply chain and the effect on us is largely working itself out, which is exciting. I think the harder question is really how are builders going to put themselves in a position to deliver against the demand that's going to come back, once the market kind of stabilizes. So it's one of the things we're focused on with the builders we work with. And it's why we were excited to announce the Simpson Strong Tie investment. Simpson, as you probably know, is one of the leading providers of structural connectors and other components in homes and commercial buildings. They partnered with us, and they're part of a larger group, actually, of investors and strategics in the building materials space, as well as land development. So there's a lot of folks throughout the industry who are backing this idea of a cloud-based data platform for representing homes. We call it intelligent home building. I
Yeah.
think it's a fun term. And I think, in the next few years, we're going to see the downstream effects of those decisions impact the housing costs.
I'm all for it, right? I mean, especially if we can bring the home prices down and not run into some housing worries, I think we'll all be fighting for that. Of course, now, what will it take to really get that increase of supply for home builders? You mentioned a little bit, 20% over the average. What would it take to get that, let's say 40, 60,
More
80%
homes?
over?
Well, that gets to your regulatory question, actually. It'll be fun to see. There is a trend towards eliminating some of the zoning requirements that make it hard to acquire and make use of land. And I think that's on the minds of a lot of folks. The NAHB obviously is advocating for a lot of this in Washington. So I think the more we see sort of the regulatory burden ease up, that'll help us build more units. It's a little challenging in places like California, where the state's pretty heavy-handed. But we're putting builders in a position to take advantage of an easier market using technology if and when that comes. I think you're going to see markets like Texas continue to pop just because there's a lot of land. There's a continued reverse migration trend going to those kinds of markets, and there's still decent affordability there.
Yeah, it still seems like there's some pockets of strength in the U.S. There's
Yep,
still, I saw mentions on Charlotte real estate.
sure.
I'm in the Charlotte, North Carolina area, so it seems like it's definitely a hot market. There's still some pockets of strength out there. And do you think that it'll just be kind of running through here? Yeah, there'll be some areas where we will come into some concern, but majority of the major markets seem like they're staying strong.
Yeah, I mean, markets that maybe went up real fast during the pandemic, just like we saw with like pandemic darlings in the tech industry, who kind of found after the pandemic that things were cooling pretty fast. I think we're going to see the same thing with those kinds of markets, but the reverse migration trend is here to stay. Like remote work is not going away. And so we have a lot to be excited about, I think, in the US, because we have so many great cities. And there's a lot of opportunity for those cities to build on the successes with the sort of reverse migration trend with all these great folks moving in.
Yeah, I think it's definitely a trend that's here to stay, and one of the things that it will definitely help is the newer kind of housing markets that are on the
Yep.
rise, right? And definitely, I think that that's why you're also seeing a lot of those 80% of home buyers that are just thinking, well,
Yep.
if I just hang on, we'll probably be seeing those home
Well, and it's
prices
like
rising,
it's
right?
frustrating for those folks because they want to be able to sit on their couches and go online and do what they do on Pinterest, but then have
Yeah.
that be able to actually walk through a real house and customize a real house. So that's the kind of technology we give to builders, and I think you're going to see a lot more of it in the market over the next 2 years as builders kind of start to really work it through their businesses. And we're excited for the difference that's going to make for buyers.
Definitely, it helps. Digital is all what we need. Tools, right? Tools make things cheaper. I think we'll definitely be looking towards it. Thank you for joining me today, Mark,
Thank
talking
you.
about the housing and bringing in your announcement. We'll
Housing's
definitely
a
keep a
great
close eye.
market. Keep investing in it. Good stuff.
All right. You have a good one, Mark. Take care. Appreciate you joining us today on the housing market. We'll keep talking about our stock market, but something that we got to keep a watch on, right? The low supply there, demand coming down, but it seems like if we can just hang on, hopefully we can get those supply numbers getting higher and higher, especially as the components and the housing inflation start coming down. We've seen those wood prices come down. We'll see if we see the other components keep driving down. All right. I still remember my man Dennis Dick building the house in the pandemic. It was a tough time for him, right? Let's keep going. Let's take a look at the other action that's going on right now. Let's go to the SPY, see how we're doing right now. Looks like we got a little bit of a pop there towards the 389.50s. Talked about how we kept rejecting that earlier in the day. You can see it over here. We got a little bit of pop, but we couldn't really hold above that. Let's go to a 15-minute chart so you can see that a little bit clearer here. You can see I'll draw a line there right around that 389.50 area. You can see that right there. There's a bunch of wicks. Let's see if we can get back over there later in the day. If not, it looks like we're going to keep playing a little bit of chop from there. Same thing I would expect here from like an Apple chart, right? Keeps rejecting the breakout. We'll look to see if we come back down and break down through the support 134s. It has been a tough day. Some stocks are still hanging in there, right? Let's get into a little bit of what was hot and what was not today. We've already talked about some of the trends today. Energy being able to bounce back, that definitely got some lift with the 12 o'clock numbers. We'll take a look here. XOM, nice little push back towards the upside, right? We'll see what happens on these stocks. Can they continue to lift? We've talked about healthcare, industrials still taking a hit there. We'll take a look at consumer cyclical. I talked about these when they were going up, how fast they love to go up. And also, we got to understand that the high beta names also like to go down just as fast, right? So let's talk about what's getting hit today. Home improvement stores, Lowe's, Home Depot, those look like they were trying to get back up, right? Well, right back down there they go. Home Depot and Lowe's. One of the things to also look at these charts is how a lot of times we get stair step moves up, but elevator moves down. That's where we really got to be careful. Names turning around today after a big, nice lift. Nike starting to turn around. Some of these are going to be dips to buy. And I think that's something that we need to keep in mind. Which ones are those? Well, you got to go ahead and start doing your digging. I feel like this is really, truly coming into more of a stock pickers market. And there are going to be some stocks that are able to hang on, some stocks that let go more than others. Keep that in mind when you're taking a look underneath the hood. All right, catching up with the chat. We'll keep going into what was hot and what was not. Just want to see what you guys are talking about. Appreciate you, Eric, joining us. The Crow, GNS, going back to 2. We'll take a look at that. Got no problem taking a look into some of these names that are making moves today. You guys keep up with them. We'll dive right into it. 3D printed homes coming soon, Beach Bum. I know that I talked to Marc last time. He said it was about a decade out that he'd worked for some of these 3D printing companies before him joining on Higharc. So I would say that, I hope that we see, 3D printing really pick up. I would love to see that manufacturing pick up, but we'll see how long it really takes to hit the market. All right, let's keep going. We'll take a look at what else is going on in what was hot and what was not. Let's actually find something that is doing well today in the SPY, in the S&P 500, but we probably just are missing it. All right. Well, one here is Discover's bounce back. Let's talk about their earnings here. They give earnings. Let's talk about it here. EPS at $3.77 beat this $3.66 estimate. Sales at 3.73 billion beat the 3.66 billion estimate. Discover Financial getting a little bit of a bounce back. And we got to keep this one on watch, right? Will Capital One bounce back like this one did? Look how this is getting the bounce back now. Capital One, of course, COF. You guys can keep watch on that one. But Discovery making a nice lift here. We got to keep on watch. What will happen to these, right? Can they keep making that nice little lift? Discovery Financial, DFS, still keeping that push here after it got hit in the morning. A little bit of a bounce back there for Discover. We'll see what happens on these. Can they keep making moves to the upside? As you see, Capital One, we'll see if that can kind of play a little bit of catch up. And it's not looking too bad. Almost, it's already back through the open price, right? Really climbing the wall of worry there. All right, getting out of Discover talk, let's keep going. Let's take a look at some other consumer cyclical that's getting hit here. You got home furnishing, apparel manufacturing, auto parts turning around, apparel stores, department stores that were so strong, right? Like a Macy's. Made a nice little up move, pulled back. We'll look to see if they catch the dip here. Of course, the Dillard's even pulling back, but I don't get in front of that train, right? KSS, nice little move in the last couple of days. Will this just pull back? Something to keep in mind. We'll see what happens there. Also, Carnival Cruise, the cruise lines pulling back, even the airlines pulling back, right? Is this going to give us an opportunity? I'm definitely looking at it. UAL, another one that I'll be looking at it. It just filled the gap there towards 48. I did like that gap fill towards 48. Not trying to jump into it really quickly. I think that we could still get a couple of days of decline, but UAL had good earnings yesterday, and it still took a major hit. I love their guidance that they gave. I'm going to be looking to try to get in United, but of course, that's going to be at a cheaper valuation. We'll look to see if we can get pulled back. You could see the gap fill today. I'm really looking for more of a pullback towards 46 area. And for AAL, that'd be kind of closer towards the gap zone here, towards 1558, 1525s. That's where I'll be looking to get in. We'll see if those can pull back. Jets ETF, something we've been talking about. If this can get right back towards 19s or below, that's where I'd want to get in. We'll see what happens there for the airlines. All right, catching up with the chat. See a couple more messages running through. Man, I'm stoked that you guys are doing the book club, trading in the zone. Can't go wrong. I'm trying to give you your cheese. You asked me, where's my cheese? I'm going to bring that cheese. The book club. You guys don't want to miss it. This Sunday, we'll start talking about trading in the zone. We'll give you guys the link also for the Google preview. If you don't have the book already, well, start ordering it. It's okay. It can take a little bit of time to deliver. I'll be there to deliver for you guys. Chapter 1, we'll just talk about the introduction. We'll get into what it's about. Don't miss that book club on Sunday. Can also throw up the link here, but I'm going to keep going with the show. I'll throw up the link in just a few, but definitely smash the like. Let's keep it going, team. All right, let's take a look at what else is making moves. Look like Austin, UCF, Knight. Fellow Knight, man. Shout out to you. Memory lane. Still remember, well, not much memory from memory lane. But Austin, a Knight. I actually went to UCF, if you guys don't know. But yeah, shout out to Austin for sure. All right, let's keep going. My Kroger grocery delivery is here, so be right back. Well, let's take a look at the grocery stores. We were looking at ACI, how that was going to perform. Kroger turning around from the 46. Look at the rejection of this trend line here, team. That's why I like looking for long-term trend line rejections. So like if you get the breakdown, look for the price action to come back to those levels and reject. Very similar price pattern that I've been calling out for Microsoft and now Apple, right? Rejection of long-term trend lines. That's what I'm seeing there. We'll see if this actually keeps showing up, right? Well, we'll look now that Kroger has had what? 1, 2, 3 times to try to get back up there through the 47. We'll look for it to take out the lows. I'll look for it to take out 43.06 just from the chart itself. looking like it wants to come back there. We'll see what happens there. ACI coming down fast today. Grocery stores, probably not it. I did see Casey's as one that I've talked about has remained strong. Still don't know about Casey's. Never been there, but hey, it's staying strong today. Coke getting a little bit of a bounce back today. Pepsi with a little bit of a bounce back today. Ooh, Pepsi actually getting hit hard. Thought Pepsi would bounce back there. Coke doing better than Pepsi today. That's a little bit interesting. Seeing that separation split today. Something to keep in mind. Kellogg's with a little bit of a bounce back, of course, beating down names in the defensive area. We're starting to get some other sectors leaking into the green. I've seen communication services, some defensive names start getting back here. We'll see what happens on these. Brewers, we've been talking about the Brewers getting a little bit of a push back. This has already retraced, but TAP getting a little bit of a push today. Sam's, not really an area that I'm just jumping out of my toes. Charge on, man. Charge on. Love it. All right, we'll keep going. We'll see what else is out there. CDC by Quantum. Let's go ahead. Let's take some stocks from you guys. It's 136. We can take a look at some of these. And then once we're done doing some stocks from the chat, we'll get into the short report by the Bear Cave. Don't miss it. This is on Planet Fitness. Let me know in the chat if you guys have been to a Planet Fitness in the last 12 months, because you guys are especially that firsthand experience that I want to talk about. I'll tell you right now, I've been in a Planet Fitness in the last 12 months. So we'll talk about that coming up. The short report coming out today from the Bear Cave. You guys know it. Edwin Dorsey. We'll have him back on. I've already reached out to him. I'll have him on probably in the next couple of days to talk about this. Let's go ahead. Let's take a look at what was mentioned here from Quantum. CDE. It's a gold stock here. So that's interesting. We have been seeing gold kind of get the lift and definitely getting the kind of support by a lot of the industry. We have been seeing this do a nice little lift there in October. Let's go to a weekly chart on this one. If I go to a weekly chart, I know a lot of people have been pointing to like head and shoulders patterns, inverse head and shoulders pattern, but this looks like one of those, right? And I'll just talk about it because you kind of have like this left shoulder right here, left shoulder, right shoulder. Now we really just need to get back through kind of a neckline, right? Can we get back there through the $4? That's going to be looking good. Then you want to see the volume increase on these breakouts, right? So you can see here, we had some good volume join into the party here. This is where I think the bulls started trying to take a shot, because you can see that nice little increase in the volume, right? As it came to that sideways support. You broke out of that. Now you've retraced some of that volume. Let's look to see if we get a nice little volume spike towards, let's say, 30, 40 million as we come through 4, and then start making our way up back towards 540 as the next resistance. This doesn't look too bad. I'll keep it on my radar. I'll even put it on an alert so that we can get alerted once it goes through 4 on live trading. Thank you for bringing it up, Quantum. Always good to have some different stocks that maybe most are missing, but this is not a bad one. I always look for a couple of things, right? If I'm looking into patterns and I'm looking to see if I like this stock, I'll be looking, does it trade at least 1 million shares a day? It does do that. Has the volume been increasing as of late? Yes, it has been increasing as of late. And that's what I want to see, because that just shows me more and more that traders are there and things can keep moving. Mitch, Casey's is a gas station with some pizza chicken stuff like that beer pop. What? Is that really what Casey's is? Is it just like a better 7-Eleven, Larry? Let me know. I haven't talked about Casey's ever. I think I'm going to have to go check it out. Is it a Northeast kind of thing? I don't know. Haven't been to a Casey's. All right. We'll see what else is out there. Yes, you made the watch list, Quantum. You actually did. There's very rare alerts that I have set. I set an alert for it. We'll see what happens there on that one. And it's always good to bring up different stocks, right? I think it's very important. One thing that I talk about often in our live trading team is that you guys out there can help each other. It's about putting things on the radar, not necessarily telling people how to trade it, right? Quantum just saying, hey, I like this stock. I like this setup. It's up to you to see it how you see it, right? And that's what it's all about, especially in trading, Twitter, all out there. We want to help each other, right? Just tell each other what we're seeing. Let them make their own decision. All right, let's keep going. It's a Midwest thing. All right, well, I'll have to figure that out. All right, let's keep going. We'll take a look into some different stocks. The Crow talking about Triple BY took a little small profit. Base hit, base hit. Did this start getting some lift? Ooh, a little bit of a pop there coming back. A little bit of the trash getting a little bit of a pop. GME also. AMC. Will these get a little bit of a lift today? I know I'm not running in front of this train, but who knows? You can see it. We did get a little bit of a spike there. SPY now back over that 390.20s as we start coming back there. Not looking too bad to start seeing some stocks start making a little bit of a push, right? I would look for maybe Tesla. Tesla is more of like one that I like here. Just got off the VWAP. We'll look to see if that takes the next step up there and gets a little bit of a run. Another thing that I talked about earlier, right? Sector and industry analysis, right? Well, if you're looking at it, now we've got healthcare way deeper into the green, 0.32. Those healthcare plans, I would expect to have done a little bit better, right? I talked about Cigna just a little bit a while ago. Look how there's just now a nice little volume pop there. We'll look to see what happens. Can these start lifting? ELV made a nice little pullback to VWAP. Now starting to push there. We'll see. Now you're getting defensives into the green. Communications, financial services getting a little bit of a spike. A stock that was strong that got a little bit of a pullback. Morgan Stanley. This one doesn't look too bad, right? Has filled in some of this gap. You can see that it came back closer towards this zone here, 93.77. I was wondering if it was going to fill the whole gap, but getting a little bit of a bounce. We'll look to see if these can start making their way back. Goldman Sachs also, look at how that reaction started there. You can see how they're trying to get back. JPM's another one that I would look to see if it can start making its way back, if these financials can stay into the green. Just slightly in the green right now from the open, and that's just right here. All right, let's get out of that trade. We'll talk a little bit about what happened today from the bear cave. All right, so throw up a 1 if you guys have been to a Planet Fitness in the last 12 months. Let's talk a little bit about that. Let's get out of what was hot and what was not. And let's get into the short report from the bear cave. Of course, this is all on Planet Fitness. Let's go to the daily chart of Planet Fitness. And then we'll go into a little bit more of the intraday action. You guys know I actually pay attention to this company often. I've been seeing it get a little bit of a bounce back. I've talked about how this stock sometimes get that January effect because the new year, new me, people out there, right? Well, we did get a little bit of a lift since January 3rd. Now the short report coming in, knocking this right back down. It took a hit here around 10:45. That was the short report. Now making its way back there towards 81.11. Let's talk about what was particularly in the short report from the bear cave. The bear cave laying out a case here for Planet Fitness that issues with overbilling uncancelable memberships and is lying about the location of its gym. I want you guys to check out this article by my man, Chris Ketchy. You guys know him. He has a catch, right? Well, you guys can check out the article about the short report. I just threw it up in the channel. And Dustin saying, my girlfriend goes to Planet. Hey, got to take your discount, right? Zoltan saying, I prefer LA Fitness. Yeah, that's a lot more expensive. Zoltan, I have LA Fitness also. There's a reason why, but we're going to talk about it right now. So what were the mentions in of course, the short report? Well, the short report talked a lot about that uncancelable membership, right? And overbilling. How to cancel Planet Fitness, what do you need to do? And in the short report, it does talk about this. It says that the company's website says that the cancellation cannot be done online, over the phone or over email or through the app. Instead, you have to go ahead and cancel in person or send a letter with reasons for why the cancellation. Of course, it also stated that about locations. I'll talk to you first about the cancellation thing. As a person that has done the cancellation for Planet Fitness, I can tell you, he is exactly right there. You cannot cancel online. You cannot cancel over the phone, and you cannot cancel over email. You can't just call them in and be like, hey, can you just cancel my account? No, you physically need to be present, or you need to send that letter. I don't know about you guys. I don't send too many letters out anymore and expect them to actually arrive or think that it's actually going to be able to cancel my membership. So I've had to do it the old fashioned hard way, actually walk into the Planet Fitness and cancel. And I had another situation where, in my case, since I originally signed up in Colorado, I signed up originally in Colorado, right? And I canceled when I moved down here in Charlotte, North Carolina. And what they told me was they had to go ahead and call the other Planet Fitness all the way in Colorado to get this special code so that they can go ahead and cancel my account. It was a big process. It took like 20, 30 minutes there. And I don't think that this should be it, right? That's why I kind of agree that it is an uncancelable membership. I wouldn't say uncancelable because you can cancel it, but it's very difficult, right? Another area that the report talks about is that Planet Fitness locations are saturated. What does it mean? Well, it says that a map on the company's investor presentation shows dots of the locations spread out in the states to make it look more like you could still see some more locations opening up, right? And he stated that in the report that it shows dots of these locations spaced out in a move that could be done to show room for unit growth to excite investors. So he's saying that this is a little bit misleading here by Planet Fitness and that they're saturated in location base, right? Well, I can tell you, at least from personal experience, I have seen, a pretty decent amount of these around me, but I wouldn't necessarily say they're saturated. Now, one thing though to keep in mind though is there another major like gym in the area? That could be true, right? You could be competing a Planet Fitness with, like, let's say an LA Fitness, or there's like Crunch Fitness out there. There's a bunch of these fitness gyms that are out there, right? There's different options here, but Planet Fitness is the cheap one, right? It's $10, and sometimes it's $1 just to start. And so, of course, I don't think they're making the biggest margins out there with their gym membership, but they do make it cheap, right? We'll see what happens to these, if it's a good option or not, or is this truly a reason to be shorting the stock? That's one thing that I'd keep in mind. I don't necessarily see this as a reason to short the stock. Big reason for me, though, is that I see a lot of people willing to pay for the gym, but only so much. What I mean by that is that the cheap part of this gym is that it costs you about $10 a month, right? There's some annual fees, there's some other things, but this is about $10 a month. Compared to, let's say, like an LA Fitness that could easily be $40 to $60 a month, right? And have higher yearly fees. Well, this is what I would have to say. But I mean, I've been in both of them. Some people in the chat bringing in some conversation. Let's go ahead. Let's bring it in here. Hazan saying that there is no comparison with LA Fitness and the Planet Fitness. Planet Fitness smells so bad of sweat. Yeah. It's also like 45, 30. Ooh, someone's saying they're paying 30. Not too bad. But yeah, I would say the only thing that I liked about Planet Fitness over LA Fitness was that I had the higher up plan where you could get the massage chairs and things like that. But it's not the most competitive advantage. Their competitive advantage is price point. That's where they're holding the memberships. And there is a ton of cancellations. What I think Edwin is pointing out in the Bear Cave more and more is that it makes it very difficult for you to cancel if you have to go in person. And just think about it. If the people aren't going to the gym and then you make them have to come in person to cancel, well, it might take them a long time for them to come to the gym, right? Well, he's saying that there could be some issues there with overbilling and things that are happening there. Like always, team, we'll have to take every short report, like always, with a grain of salt. You guys do your own research, do your own channel checks. We'll see what happens in Planet Fitness today. Definitely taking a hit off this short report. And of course, we'll reach out to Edwin Dorsey from the Bear Cave to bring him on to speak a little bit about Planet Fitness. I just wanted to cover it on our deep dive of the day. Hope you guys enjoyed it. Fitness, Urban Farms Project says, I barely leave the house. Well, hey, do a little push-ups, right? A little home workout, right? Who knows? Maybe get yourself a little bit one of those grip things. All right, let's keep going. Let's get back towards the market. I've definitely been going back to the gym, but that's just because I'm going to get back into a baseball league. Got to show you guys out there. I know I've had the question before. Mitch, can you hit 90s? Ooh, get ready, team. Get ready. We're going to do it. Get the shake weight. One of those shoulder things that you just kind of like wiggle back and forth. Who knows? Whatever works, right? All right, let's keep going. Let's get back towards the market. I do see some mentions of the bros in the channel. That doesn't look too bad. It is getting a little bit of a pushback. For me, it's going to be all about Starbucks. If Starbucks can continue strong, yeah, I think bros can come back. But Starbucks has been an absolute monster. We'll look to see if this starts coming back. All right, team, we got about 9 minutes left. I see you guys in the chat doing that shaky shake. You guys know it, shaky shaky. Hey, whatever works, really. I mean, I've seen people do like yoga at home, things like that. There's plenty of ways to work out, team. Just stay. You don't have to be, the fittest person. Just stay healthy, right? All right, let's keep going. Let's get back towards the market, see if we're finally getting a little bit of a push, or is this more just a turnaround? I've talked about the 389.50s being that spot. We got another kind of big wick there, big turnarounds. It doesn't look like we really just want to ramp back up. And I think that's not a good news for the bulls. We'll see what happens there. QQQs, only $1 away from reclaiming the 50-day. We'll see what happens there. Let's take a look at the daily. You can see the 50 days right above that. That's where the yellow line is that's being referred to by OP. We'll look to see if we can get back up there. If not, we'll look to see 275. It bounced so many times off that level today and then finally broke. Now we recovered that 275. We'll look to see if that breaks down later in the afternoon. Of course, the Qs, big tech focus. We'll see what happens on names like NVIDIA. NVIDIA was trying to battle back there. It is getting a little bit of a pushback. We'll see what happens in some of these names. But one thing to keep in mind, right? Like a company like Roblox that had given such a good pre-announcement. They gave their daily active users. They spiked about 12% off of that news. Now they're already right back down. That's where you got to be careful. Names like this, like Unity, started making its way back. So you see January 3rd, made about a 23% move. Now, in the last 2 days, down 12, 13%. We got to be careful on things like this. Restaurants, we've talked about them. Shake Shack, let's get into that, Sydney. I've been watching these restaurants. They are getting a little bit of a pullback. If these are the ones that can continue the lift, that's something to keep in mind. A Shake Shack has been getting cheaper and cheaper chicken prices. That's helping the cost, right? They're still being able to meet the demand out there. And this one is one that I think could eventually bounce back. Look at the monthly chart in Shack and how you've come back all the way to that monthly support. Bounced there a couple of times. I'm going to look for this one really to start showing strength above 60, but Shack doesn't seem too bad. DPZ is another one I talked about earlier in the week. I wanted to see if we can get back above 350. Today, we already are starting to get back above that level. Look how you have multiple highs here. 5-star level around that 350. That's what my man Joel Alconen would say. And we'll see if we can hold 350, 351. We'll see if we can start pushing back here towards a 200-day moving average. Of course, maybe you like some Papa John's instead. This doesn't look bad either, right? Looks like kind of like a head and shoulders here. You guys can see left shoulder, right shoulder. Are we going to make our way back up there? That's what I'd be watching. Can we make our way back into the 85s, 87? Pizza. Who loves some pizza? Can't go wrong. All right, let's go to XOM. Take a look there. Oil making its way back. We'll see if that can continue to climb. I did see a spike around 12 o'clock. That's been pushing there. Oxy coming back there. Halliburton is one that I've been looking at. This one's still lagging. I think it could still get a nice little lift. SLB tells me that, right? Slumber J, they trade very similar. getting a nice little bounce back is that Slumber J. Pulled back to the 9 EMA, right back up there. We'll see if it gets towards 59 and keeps pushing. All right, we'll see what else is going on. We have the meats. All right, team, that's going to do it for me. In just a couple of minutes, you guys will get the roadmap action. Let me see if what they're talking about. Oh, no show today. All right, looks like there's no show on the roadmap. So up next at the close, we'll see you guys at 3:30, team. Keep going. Keep working on those skills. I'll see you guys a little bit later. If you guys want to take a look at some stocks towards the close, I'll see you guys at 3:30. I won't have Joel Elconin, but we'll take a look at all the action, right? What's moving today? What got the lift in the S&P 500? Where's the chop? What's falling off? And of course, our question of the day, is this the stock market pullback one to buy? I'm going to go ahead and say you have to be very, very smart with picking what kind of stocks you're buying on pullbacks. Restaurants doesn't seem too bad, right? But recession coming. Are some of these recession proof? Could be, right? DPZ. I feel like cheap pizza can still do well. We'll see what happens on these names. But names like Affirm, I don't know. I wouldn't run in front of that. I wouldn't be trying to buy the dip on that. Carvana, I wouldn't want to be buying the dip on Carvana, right? There's still some out there that I'm going to be looking at. Like I'm still looking at Shopify for long-term outlook. But right now, I'm not jumping out of my shoes to buy a whole bunch of names long-term. I still think there's some headwinds, and we could get a little bit of a push right back down to the low end of this range. And if we do push to the low end of this range, that's probably when I'll be getting more and more into longs. We'll see what happens in the SPY and the overall market. Shout out to everybody in the chat that participated today. It's always good to see you guys out there. The Crow, Zoltan, Dustin coming in today. Eric was here. Shannon, it's good to see you guys. OP, it's always good to have some new faces in the chat. Urban Farms, we'll see you guys next time. Sharif, bottom will be in late February and early March. I'm looking at this similar time frame. We'll see what happens there. Hit the thumbs up. Where's my cheese? Let's always get the cheese. And Swiss, right? Swiss, right? A little baby Swiss. Can't go wrong. A little roast beef action. I'm thinking lunch. I'll see you guys in a little bit at the close.